What is up, everybody, and welcome back to EPK Capital's, the daily dose of dollar, your go-to channel for all things market and money related. And boy, oh boy, do we have a jam-packed episode for you today. The last 24 hours have been a roller coaster, to say the least. We've got drama in the stock market, some juicy macroeconomic news that'll make your head spin, a dash of political spice, and a crypto corner that's looking more like a crypto roller coaster. So, grab your coffees, buckle up, because we're about to dive deep into the financial frenzy of Tuesday, October 14, 2025. Alright, let's kick things off with a grand tour of the global stock markets. It's been a mixed bag, folks, with some indices seeing red and others just trying to hold on for dear life. Starting in the United States, it was a bit of a nail-biter. The S&P 500, that big, beautiful benchmark of the US economy, closed at 6,653.89. That's a decent jump from the previous close, so somebody's portfolio is looking a little greener today. The Dow Jones Industrial Average, the granddaddy of them all, also had a positive day, closing at a whopping 46,070.73. The tech-heavy Nasdaq Composite, however, after a rough previous week, seemed to be finding its footing. We'll have to wait for the final closing numbers to see where it landed, but the sentiment was cautiously optimistic. Now, let's hop across the pond to Europe. The FTSE 100 in London was trading around 9,415.76 earlier today. It's been a bit of a seesaw, so we'll be keeping a close eye on that. Over in Frankfurt, the DAX opened lower and was trading around 24,137.16. It seems the German market is feeling a bit under the weather, with some big names like Siemens Energy taking a hit. And what about Asia? Well, the Nikkei 225 in Tokyo closed down at 46,761.34. It seems the sun wasn't shining so brightly on the Japanese market. The Hang Seng index in Hong Kong also took a tumble, closing at 25,451.28. So, a bit of a gloomy picture in the East. So, what's causing all this commotion? Well, you know it, I know it, it's the macros, baby. The big picture economic stuff that pulls the strings of the market. And yesterday was a doozy. First up, we had the International Monetary Fund, IMF, releasing its latest World Economic Outlook. And let me tell you, it was like reading a suspense novel. The IMF is forecasting global growth to be around 3.3% for 2025 and 2026. That's not terrible, but it's not exactly a barnstormer either. They're highlighting a lot of divergences, a fancy way of saying some countries are doing great, while others are not so much. The US is getting a little pat on the back with an upward revision, but other parts of the world are seeing their forecasts trimmed. It's a reminder that we're not all in the same economic boat. In the UK, we got a look at the latest unemployment and earnings data. The unemployment rate ticked up slightly to 4.8%, and while wage growth is still there, it's not exactly setting the world on fire. It's that classic, good news, bad news, situation that keeps the Bank of England on their toes. Over in the Eurozone, we're still waiting on the latest industrial production figures, which are due out tomorrow. But based on the last reading, which showed a small rebound, there's a glimmer of hope for the manufacturing sector. Still, with energy prices being what they are, it's a tough environment out there for European businesses. And of course, we can't talk macros without talking about the big kahuna, the United States. All eyes were on any potential inflation data and what the Federal Reserve might be thinking. We didn't get any major inflation reports yesterday, but we did have Boston Fed President Susan Collins speaking. Now, these speeches from Fed officials are like a cryptic crossword puzzle for investors. Every word is dissected for clues about future interest rate moves. The market is still pricing in a couple more rate cuts this year, but with the government shutdown still dragging on, some key economic data is being delayed. This is making the Fed's job, and ours, a whole lot harder. Imagine trying to drive a car with a foggy windshield. That's what it feels like for investors right now. And speaking of foggy windshields, let's talk about China. While there wasn't a major data dump yesterday, the aftershocks of last week's trade balance figures are still being felt. Exports and imports were a mixed bag, and it's clear the world's second largest economy is still navigating some choppy waters. Now, you can't have a market update without a little bit of political theater, can you? And yesterday did not disappoint. The main event was a threat from former President Donald Trump about imposing massive, new tariffs on China. Just when you thought the trade war was simmering down, he comes in and turns the heat right back up. This sent a shiver down the spine of the markets, especially the tech sector, which is heavily reliant on Chinese manufacturing. The Nasdaq took a tumble on the news, a stark reminder that a single tweet or comment can still send shockwaves through the financial world. It's like that one relative at a family dinner who just loves to stir the pot. You never know what they're going to say, but you know it's going to be interesting. This tariff talk is part of a bigger, messier picture of US-China relations. It's a high-stakes poker game, and the global economy is the table. Who's bluffing? Who's holding the winning hand? Your guess is as good as mine, but one thing's for sure, it's keeping investors on the edge of their seats. And let's not forget the ongoing US government shutdown. It's now been 10 days, and while the markets have been surprisingly calm so far, the longer it goes on, the bigger the economic headache. We're talking delayed economic data, furloughed federal workers, and a general sense of uncertainty. It's like trying to run a marathon with a pebble in your shoe. You can do it for a while, but eventually, it's going to start to hurt. And now, for my favorite part of the show, the part where we venture into the wild west of finance, the crypto corner. It's been a red day in crypto land, folks. A sea of red. The total crypto market cap shed a whopping $150 billion in just 24 hours. That's enough to buy a small country, or a lot of pizza. The big news driving this downturn seems to be coming out of China. Reports suggest that Beijing is imposing new curbs on the American units of certain companies, which has spooked the crypto market. It's another reminder that regulatory uncertainty is the boogeyman that haunts the crypto space. Bitcoin, the king of crypto, took a hit, slumping as much as 3.75% to around $111,500. At the time of this recording, it was hovering around £84,444 here in the UK. Ethereum, the queen of crypto, also felt the pain, falling about 7.5% to below $4,000. Currently, it's trading at around £3,010. And the smaller, more volatile altcoins? Well, let's just say they took an even bigger nosedive. It's a classic case of the jitters. When a major player like China makes a move, the whole market feels it. It's like a flock of birds. One gets spooked, and they all take off. So, there you have it, folks. A whirlwind tour of the last 24 hours in the markets. We've had ups, we've had downs, we've had political posturing, and we've had a crypto correction. It's been a day that reminds us that in the world of finance, the only constant is change. So what's the takeaway from all of this? Well, it's a reminder to stay informed, stay diversified, and maybe, just maybe, keep a sense of humor about it all. The markets will do what they do, but it's how we react that matters. And on that note, that's all the time we have for today's Daily Dose of Dollar. Thank you so much for tuning in. Don't forget to like, subscribe, and hit that notification bell so you don't miss a single update. I'll be back tomorrow with another deep dive into the financial world. Until then, stay savvy, stay safe, and may your portfolios be ever in the green. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice.